The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 2nd terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Why? Because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. I usually save this for Tom's show when I do it, and I thought I would go ahead and just break it out. I call it Become an Ant. So for those of you who haven't heard this story, well, it goes like this. Ants live by a four-part belief system, a success philosophy that, in my opinion, everyone should totally embrace. Belief number one. Think about it like this, folks. Ants never quit. If an ant is headed somewhere and you try to stop it, it will find another way. They'll climb over. They'll climb under. They will climb around. They keep looking for another way. Folks, never quit looking for another way to get to where it is you are supposed to go. That's belief number one. Belief number two, ants think winter all summer long. Now, this is a really important perspective because summer does not last forever, and therefore, ants gather their winter food in the middle of summer. I think another great belief system. Belief number three, ants think summer all winter long. I think that's even more important because during winter, the ants remind themselves that winter will not last long, and soon they'll be out there hanging out with their friends down in Clearwater Beach. On the first warm day, the ants, what will the ants do? Well, they'll come out, and if it turns cold again, they dive back down into earth. But as soon as it warms up, back out. They're ready to go. Ants think summer all winter long. What a great third belief system. How about number four out here? How much will an ant gather during the summer to prepare for winter? You got it. That's it. All they possibly can. This, my friends, is the way to live. Number one, never give up. Always look ahead. Focus on what you want. Stay positive, and most importantly, do all you can do. Well, let's go take a look at these markets. Let's go see if they're doing all that they can do. Right now, we've got the Dow up 52 points. That's up about 0.4% out here. The S&P up 0.4% as well. That's up 6 points. NASDAQ futures up 0.5%, up 17. You've got the NDX itself up 17 as well. Russell 2000 up 5.6, up 0.6%. The New York Stock Exchange, the larger breadth of the marketplace, yawning right now, only up 25 points out here. If we take a look at the currency market, well, you've got the King is off to the moon. Up, I got a little delay on my King dollar here. It's up 64 ticks. We've got the euro back 123. The pound is off about 46 ticks out here. Goldilocks having an inside day. It's up $22 right now, trading at 14.68. Silver the same, up 2.5%, but really just traveling inside of yesterday's range, up 61 cents. That's trading out at 23.96. Light sweet crude taking back some of its losses from yesterday. It's up 75 cents, 0.8% out there. Over in Europe right now, we did have Mario Draghi come out and say he was going to go ahead and cut interest rates. That's what is putting the weakness inside the euro. You have the DAX is up 27 points. The FTSE down 11 over in Asia last night. The Nikkei was off 105 points. We'll take a look at it. Not that big of a deal. The Hang Seng was down 68, and the Shanghai off 4. Our call-in number is 877-927-6648. Give us a call. Would love to hear from you. You can take a look at your stock chart or anything that you would like to have me try to answer. Let's go take a look at the S&P 500. Let's start off with the S&P 500. It is trading. I hit the right tab on my screen here. Since I mentioned my screen, if you are listening on the radio or your mobile device at tfn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this on your smartphone. Just go to the home page of tfn.com. On the right-hand side, just take a look at that little icon, the little button there that's got 3 smartphones. Click on that. the show will stream live to you. That will be a beautiful thing. And you can always catch the archive of this show on Channel 10. Yesterday, what did we do? The SPY here coming off of the May Day high out here, the sell in May. We'll see if that is going to continue. No, inside the SPYs, inside the diamonds, we have that little hurricane pattern. That's this 4-candle session between April 10th, April the 11th, April the 12th, and the 15th out here. The high of April 11th is 1597.35. On, let's see, today's Thursday, on Tuesday's trading session, it actually closed at 1597.57. Did it just slightly. Yesterday, down with volume. Breaking the rising price channel here that we're taking a look at. That's cracked that rising price channel a couple of different times out here. But what the what the S&P has not done, the S&P has not broken back into the 2007 area. That 2007, October 11th, swing point high, 1576.09, the low, 1546.72. You will know that the S&P has truly broken down. I mean truly broken down when you get a close below the hammer candle of April the 5th. That level here has been tested, was tested twice. It was tested on April 18th, tested on April the 19th, and that area held. Also, break below that is going to take you back down inside the lower part of the range, meaning a long-term consolidation that, quite frankly, takes you back from all the way to the year 2000 out here. So the S&P will really give you a signal about its weakness when you get a close below 1539.50. That is the hammer candle from April the 5th out there. If we go take a look at the actual SPY, see what the SPY did yesterday. The SPY down with 138 million shares. 138 million shares. The low of yesterday is 158.10. The high of the 15th was 158.13. So it got in there that downdraft day on February 15th, 216 million shares. Of course, we had volume to the downside on April 18th, 167 million shares. And yesterday to the downside, 138 million shares. So the volume, although it accelerated, backing off just a bit inside the SPY here. So what does that set up? You know, it sets up another possible run for the high out here. The high, again, being April the 11th, 159.71. Today's bounce is going to be important to go ahead and take a look at the volume, because we have seen the volume days are to the downside, and all of the updates here are on lighter volume. So far, the SPY, we've been trading here for 45 minutes. Volume so far today, 24 million shares. So volume so far in the early stages, not too bad. Yesterday, again, down with 138 million. So be benchmarking any volume that you see in the market today. If we go take a look, let's go switch here. Let's do it this way. It makes it a little bit easier. Let's go take a look at the small cap. So let's take a look at the IWM. Then we'll go take a look at the Russell 2000. Well, the small caps here, clearly the weak link in this chain out here. The small caps, you know, when the small caps gapped up, coming off of the October 16th low, and the gap up that I'm going to refer to, well, it's gapped up a couple of different times. The first gap up was on November 19th, 45 million shares. The next gap up came on January 2nd when we came back and our government, our politicians saved the world. Okay, it gapped up regardless. 116 million to the upside. So those were the moves up volume-wise. Take a look at yesterday to the downside, 120 million shares. So big volume to the downside yesterday, exceeding the volume on April 15th, still trading inside that April 15th swing point. I suspect that the April 15th high, you know, will act as a resistance level. That is 93.15 inside the Russell 2000. But the Russell 2000 is giving you all the signals that when the market cracks, this is certainly where you want to be on the short side of the trade out here. All the volume to the downside. What's the next move over the longer term, meaning, you know, the upcoming weeks or so? It's going to be the IWM moving down into the February 26th area, somewhere around 89. The low of February 26th is 88.79. You'll be paying attention to volume as it moves down into that level. So the IWM Russell 2000 is a weak link. If we actually take a look at the Russell, which we'll do here momentarily, we can see really basically the same thing out here. The Russell 2000 had made its way up into the swing point of April the 11th. It did not make its way all the way up to the swing point high, which is March the 15th. It did not make it up to even the low of that swing point, which is 949.48 out here. So the right now what the Russell is doing, it's really, as you can see, it's creating this consolidation move here. In fact, if we just simply take a look at it, we'll just draw a black line across my screen. We'll draw two of them. So we'll take a look at this consolidation that it has been traveling in here. Give me a moment to actually select the right tool. And then let's go calculate what that is. So we're going to use here basically from 898. We'll say that is the low to about 950. So we've got 50, 60, about $62 move from a consolidation standpoint. In fact, let me just do this. It's a little bit easier, that I don't have to actually do the math on the air and look foolish when I somehow don't do a proper job of adding or subtracting. We'll take that yellow box and measure the consolidation area, and now we'll just move it to the downside. So whichever direction the Russell 2000 cracks, whether it be to the upside or the downside, is probably about a $62 move. Well, with volume being to the downside, which side do you think it's likely going to head to? Exactly. Should head to the downside. As you can see, that same move, when you break a consolidation, the consolidation, the move is going to be equal to or greater than the actual consolidation. Well, in this case here, if we take a look at, just to try to put together a number of tools, let's take a look at the retracement now coming off on November 16th, all the way up to that high that was put in on March the 15th. You'll see the 0.618 levels, 836. You'll see the January 2nd swing point is anywhere from a range of 849 to 873. That is where the Russell 2000 is going to head to. The bottom of this area, which is very close to the actual breakout day of January 2nd, 849.35. That's what the consolidation is saying that it's going to do. And that's this little consolidation that will say it's been really traveling in since about January 24th out there. That is the Russell 2000. So even if you aren't a person that utilizes yet the tools of understanding Fibonacci retracement or expansion, or you're just new to technical trading, identifying consolidation areas is an easier visual thing to be able to do, and all you have to do, it's really a measured move. Just take a look at that consolidation from top to bottom and know that when you get a breakout, what you're looking for is, certainly conviction behind the move. When you get a breakout of that area, you will see a move equal to or greater than that price range. It looks like that is really what the Russell 2000 wants to do. If we go take a look here at the Dow, let's go see what the Dow was doing yesterday. The Dow held up pretty well. If we take a look at my Dow chart out here, we'll see a rising price channel. That rising price channel coming off of the lows of November 16th. And 2012 out here, you can see yesterday price moving right down to the bottom of that rising price channel. Today, a move higher. What the Dow has got this, what I call that hurricane pattern, this 4-candle pattern out here from the same dates, from April the 10th through the 15th out here. We can see retracement-wise what the Dow was able to do off of its highs to the low. That what looks like a hammer candle was the 0.7. It actually got above the 0.786 area. It got into the swing point here of April 11th before it gave way yesterday. Big old bearish engulfing candle here inside the Dow. And we know inside the Dow is struggling. A lot of volume off the top and a number of equities out there. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 74 points right now. S&P is up almost 10. Popping to the upside. Visa, the leader in the clubhouse, they are up 970. Google up 930. Apple up $7, trading at 447. Pioneer Natural Resources up 760. That's up 6%. Priceline is up 691. That's just a blip. That's only up 1%. Yelp having a big day out here, up $6, up 24%. Hornback Offshore, HOS is the ticker symbol, up 13%. Concours Technologies, CNQR, up 556. That's up 7%. Prudential Financial, PRU, up 7% as well. Regeneron Pharmaceuticals up another $4 today. Generac Holdings, the makers of the power supplies out there, they are up. And speaking of power supplies, we got the Energizer Bunny, I should say, up 4%. ENR is the ticker symbol. You've got the Legren Group, AGN, up 368. OM Group, up OMG. How about that? That's their ticker symbol, OMG. We'll have to go take a look at that stock chart. It's up 15% this morning. If we take a look here at the downside, Sam Adams, Boston Beer. I wonder if they are out with numbers. Down $17, so they are down healthily. I don't know if that didn't sound right, but they are down big time. The revenues, out with revenues, they reported $146 million versus $122 million last year in revenue. So nobody's having any trouble drinking beer. 51 cents earnings per share versus 56 out there, so income must have been off just a tad. You've got also DXP Enterprises off about 14%. That's off $9 this morning. Triumph Group, TGI, having a bad morning, off 9%, off $7. Shire PLC down $6 and 6%. Catamaran Corp off $4.85, down about 8%. ANSYS Inc., ANSS off 4. Strayer Ed, STRA off 7% this morning. So we'll take a look at some of those. Let's go back here and finish off the ETFs. We took a look at the SPYs. We took a look at the IWM. Let's go take a look at the diamonds here. Yesterday, the diamonds moving down, moving really, just a little bit below the rising price channel here. Doing it with volume that was not that big of a deal. 5 million shares to the downside. It's got a swing point low of April 22nd. That has 11 million shares. We had that downdraft on April 15th, which was 15 million shares. So no real conviction behind the move inside the Dow here yesterday. So far today, it's trading up. It's trading out at 147.40. Volume-wise, 867,000 shares to the upside. Almost been trading for an hour here, and we know that this is weighted more towards the first half hour and the last half hour. So 867. So down yesterday with 5.3 in the first hour, up with 8. Looks like you're going to have a lighter volume bounce here inside the diamonds, the DIA. Let's go take a look at the last ETF. Well, not the last ETF, but about the last index ETF, and that is the Qs. The Qs here, we're going to have to watch the Qs. The Qs back up over the swing point high from September the 19th, and, of course, we want to be watching this. Why? Because if there's going to be a breakout, this is likely where it is going to come from. So if there's going to be a spoiler early on in the sell in May, early stages of sell in May, it will come from the Qs. And the reason is because of this, because of that 0.786 Gartley sell pattern that was out there that now has turned into a move of a move, and you always have to be careful because those patterns can turn into butterflies. Gartleys can and often do turn into butterflies, especially when you have one that fails. In this case here, it was a failure because it was tested from March 6th all the way over to when it failed, which was on April the 10th out here. Volume, though, yesterday, we'll go ahead and get rid of that. If we take a look at volume yesterday at the swing point, we had a failure on price and volume. That swing point high from September 19th, 36 million shares, 70.58. Yesterday, you get up to a high of 70.85, close at 70.39 on lighter volume. 28 million shares versus 36 million shares. That's a failure on price and volume. You're back up over it. Now, when you got up over it, which was on Tuesday, that was done with 30 million shares. So it was up and over that swing point on lighter volume. Of course, when you're up and over a swing point, you most certainly, or price can most certainly travel higher. Today, volume-wise, 6 million shares in an hour worth of trading out here, so it's got some pretty decent volume. Of course, that is just the first hour. Should this turn into a butterfly pattern, the price projection on the Qs would take you all the way up into the $73 mark. 73.10 would set up your 1.272 butterfly expansion. One thing at a time, Scotty. So that is on the 4 ETFs out there. Let's go back and take a look here at the euro. We'll have to do that when we get back from break. Then we're going to go take a look at stocks like Boston Beer, DXP Enterprises, Shire PLC. We'll take a look at Pioneer Natural Resources, Hornbeck Offshore. Oh, yeah, we got to go take a look at OMG and go see what that is doing. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is up 74 right now. Russell 2000 up 9%, leading the charge up 1% today. But, of course, that's leading the charge after being down big time yesterday. If we take another quick look here at the IWM, it's trading out at 92.82. I suspect it will find some resistance as it approaches this April 15th high again, which is $93.15. It's at 92.82 right now. But the IWM, big volume to the downside, absolutely showing its true colors, that it is the weak link to the downside. Let's go take a look at OMG is the ticker symbol, and OMG is the OM group out there. And the OM group, what they do, they provide specialty chemicals, technologies, materials worldwide. I don't know what that means. The company operates through magnetic technologies, specialty chemicals, and battery technologies. Well, OMG is having a nice morning. Now, if we take a look at the stock chart here, you can see wide price spread here. So far, now this is not your most liquid of stocks out here. As an example, travel looks like it does between 100 to 300,000 shares per day out here. If we take a look at today's price movement, nice wide-ranging bar. Low has been 23.60. The high has been 26.67. Volume behind this move, 365,000 shares. So it's got some pretty nice volume. Now, what this did do, this gapped up on this was a real wide price spread day on this. And the breakout session was January 22nd, 3.3 million shares. It had closed the evening before at $23.18. It got as high as 27.22 on the 26.76 on the January 26th January 22nd session out here. This equity came back, and as we came back to the breakout area, so we'll just draw a line across the screen here, got just slightly below the breakout level, and here the only thing that you can use for a breakout level is going to be the candle that it broke out from, a small-bodied candle, so small that, I mean, we're talking about an open on that session of January 18th. The open was 23.30. The close was 23.18. So you had a 12-cent bodied candle out here. The equity does move down below that, and gave you a gave you a signal here. Gave you the signal was this little gap, was this little hammer candle. Now, small in nature for sure. Almost created an island reversal. So you can see it was not an exact island reversal, because the low of April the 4th was 22.65, and it closed at 22.70 on that session from April the 8th out here. But you did get a hammer candle. Volume was pretty low, and this thing truly has. Now, what will this do? This should now at least move up to the swing point high out here, and that almost looked like an island reversal up at the high as well. So maybe this is going to consolidate. It was not a island, I don't believe so. 28.02 on. Is the low on January 30th, and the high was 28.03, so it was not on January 31st. So this should head up to the swing point of January 30th, right around that Basil Chapman round number high, $29 even Steven on January 30th. If we pull this stock chart back a little bit further, let's put this on a weekly chart, see what else might stick out at us. On this equity here, if it's able to take out the swing point from February the 1st, it'll be a nice A to B equals CD up. Let's go measure that. So OMG, oh my gosh, it looks like might be trying to actually form an A to B equals CD up. Now this A to B equals CD up. That means on the weekly chart you'd be taking out that February 1st high, $29 even Steven mark. Only needs 2.7 million shares. If it does that, where this will move to most likely $39.94. It'll pass this 1-to-1 A to B equals CD, which is 36.15, and move up to the 39.94 level. That's assuming that it's got volume behind the move out there, and no reason for it to not do that. In fact, if it does, what you will see is really just a longer-term consolidation move on this equity. So as we take a look at that, we'll just draw the black line across our screen on this, and on the top as well as the bottom. And so you can see this here. So again, if you're just watching us on Tiger TV, maybe you're listening in, you're just starting off with technical trading, you're trying to figure out what tools it is that you should use. Get a stock chart where you can be taking a look at longer-term, shorter-term time frames. In this case here, OMG on the weekly, clearly in a consolidation move out here, and it's a pretty nice consolidation move. You're talking about 15 to about, looks like we'll call it 40, so a $25 price move. Looks like OMG trying to make its way up to the top of that range at $40. Let's go to Mark in Fort Collins, Colorado. Mark, thanks for calling. Thanks for holding. How are you today?
How are you?
I am doing excellent. Thank you so much for asking. You wanted to look at KBH Homes. Tell us what you're doing and how I can assist you.
It looked to me that it was pulling back on lighter volume yesterday. So near the end of the day, I picked it up around 22.10-ish, and it's having a nice move today. And I'm trying to figure out, my target here is about 24 to 25 bucks. Looks like it kind of had a breakout, and let me know what your thoughts are.
It's a nice looking stock chart here. KBH, folks, is the ticker symbol. Obviously, a housing stock out here. And if we just simply come back on the daily chart. And on the daily chart, this has a number of different breakout sessions here. This thing really began breaking out with this high-volume bar here on June the 29th, 27 million shares. And, folks, you can watch how this came back and it tested that area. Never really closed the gap, came back and tested it. Much lighter volume. Broke out again here on September 21st, came back and tested that area. Broke out again here with a wide volume bar on January 23rd, came back and tested that area on light volume. The last breakout here came back and tested that. It got a little bit, unlike the unlike the other breakouts here, it actually got a little bit lower. That was the first time. But really what held it in place was the session where it broke out from. So, which is more typical of what you would see. And so as I put that black line across the bottom of that candle, again, nothing wrong with the way that this came back into that area. On the daily chart here, the A to B equals CD up on this mark is $24, $23.95. But the reality is this should move more like to $27 if it can clear the most recent swing point. So no real breakout. The most recent breakout that we had in this was the one from March the 21st out there, and that swing point here on April 29th is 3.4 million shares. So you're inside it today on 882. Mathematically, that says that you've got volume moving into it versus coming down yesterday, as you said, on light volume, 2.6 million shares. So support on this, I don't know where your stop is. Your real support on this would be a close below, I would have to say a close below the April 18th session, which would be 1968. So if this thing, and folks, if this does move back to that level, and it's moving back on lighter volume, say less than, they all have about 5 million shares. Let's say less than 4 million shares out there on KBH. That would be a nice buy. So looks to me like a nice trade, and looks like you will get the $24 out of it. I just think it looks like it may want to also go higher.
Sounds good. Thanks.
Hey, no problem. A nice trade out there. 877-927-6648. The Dow is up 70 points here right now, and in the marketplace, the wild gyrations really coming inside the euro. She is down 141 ticks right now, King dollar, and I've got the delayed chart on it is up 72, gold up $22. Something is going to give today. Something is disconnected in the marketplace here. You don't have the dollar up a full percentage point, and the market's doing what they're doing out here. That is not what we'll call normal behavior, and the bounce that we're seeing here so far in the market is on light volume. That's irrespective of KBH Homes. This is a market of stocks out here. So KBH, even on its pullback, as Mark was pointing out yesterday, on light volume out here. So a nice trade out there. If we take a look at some of these other stocks here that were popping and dropping, Boston Beer. We said we'd go take a look at Boston Beer, and I am a man of my word. So that ticker symbol is SAM for Sam Adams. Ooh, gapping down with volume. Okay, so now let's go take a look at Boston Beer out here. Now, Boston Beer had a real nice breakout session that takes you back into real wide-ranging price and volume December 13th out here. Let's draw the line across the screen, and as we do that, we'll take a look at the actual gap in the breakout session here. Boston Beer on December the 14th breaks out with is that right? 891,000 shares. So not exactly the most heavily traded stock out here. And this thing, let's go see what they're. Well, we did take a look at the revenues and the volume and the revenues out there. And as we take a look at this morning, down off of its highs with volume, not a good sign. 248,000 shares. Again, an hour and 14 minutes worth of trading, but not a good sign here. You can see volume-wise, it's going to have more volume than the last couple signs of strength out here, which the last one was on February 25th. So it looks to me like Boston Beer is going to make its way all the way back into that breakout session on December the 13th. Now, that low is 127.20. Boston Beer can come back into that area and test that on, and here's where you're benchmarking it. On that 12-12-12 day, the date of that great concert up in New York at Madison Square Gardens, 12-12-12, the low is 112.58. Oh, that's how unusual is that? And the high is a 114.23. And the volume there is really what you're using, 73,000 shares. If by chance this comes back into the gap or the low of the December 13th candle at 127.20, and it does it on certainly less than 73,000 shares, that would be a nice little buy signal. Now, it's pretty early to say because you have to see how volume is moving on its way down as it's approaching this area. If volume is somehow accelerating, that says don't get in front of it. That freight train wants to stop at the station labeled 12-12-12, which is going to be the price range of about 112.58 out there. As we pull this back even further here, this is volume off of the highs from Sam Adams. So that is not a good sign out here. This thing was a IPO that takes us back into the time frame. Oh, it's all the way back in 2004. So I take that back. So, but still not a good sign at its all-time highs, and volume off of the highs, none the less out here. So we see this happening, time and time, day and day again. So that's on Boston Beer. Let's go take a look at the DXPE as the ticker symbol. They're off about 14% this morning. That used to be, I believe that was one of the IBD stocks. I haven't looked at the IBD 50 here recently. I mean to. Just been too busy doing other things. DXP Enterprises, let's see, were they out with numbers? They most certainly were. They reported net income of 13 million shares. I don't know what that was in comparison to. How about that? Doesn't say here. They are in the wholesale distribution business, maintenance, repair, operating products, equipment services to industrial customers. Segment provided MRO products, equipment services to industrial. Well, I didn't give you a whole lot of information here. But let me give you the information on the stock chart. Don't get in front of this. This thing is down with massive volume. Only been trading for an hour and 16 minutes, and you're talking 291,000 shares out of this thing. This thing had a last sign of strength, which is where it's trading into. That sign of strength was on volume of only 182,000 shares here. So you got volume. This says that it's going to explore lower prices. And as we pull this back here, we can figure out where that is. It's very simple. It's June 26, 2012. Take a look at high volume bar down there. That is a low. That price point is 36.76 to 41.37. That is on DXPE out there. And if that area doesn't hold, it will go ahead and give way and move all the way back into an open gap out here from November 30th, 2011, right at the $29 area. But expect you are now down, you're trading into the set of swing points on the daily chart. That was the February 26th, which is really the next stop down in our markets. It's really going to be about that February 26th area. So when you take a look at the IWM, which is the leader in the clubhouse, and if you will, to the downside. The one that's getting back, let's go ahead and pull the IWM back up here real quickly for you, because as we were taking a look at this moving down to February 26th, it's really the same thing here inside the Russell 2000. And that's we're going to be paying attention of strength and weakness in the market. Right now, the weakness in the market is the IWM. The second is probably the Dow, because of the volume characteristics off of the highs of the big leaders out there. That's a very bearish sign out here. So on the IWM, where we're going to be really benchmarking what happens is as it moves down in that February 26th level. Now, February 26th, that swing point, has 47.5 million shares out there. You start moving into that with volume, and it's already screaming to us that that's what it's really going to do, because it did this on April the 15th, 101 million shares, and then yesterday was really the big scream, 121 million share, 120 million shares to the downside. So it shouldn't have any problem finding the volume conviction as it approaches that February 26th level to take that area out. If, on the other hand, it doesn't, and it comes back there with 47 million shares, what this is setting up nothing but a consolidation area right now inside the IWM, somewhere between 89 to 95. So that is about a $6 move. It's probably about $5.50. So $5.50 to $6, and that's on the IWM. But seeing the market pull back here, let me go in and take a look at the 30-minute futures contract on the ES. That has twice now tagged this point 618 Gartley sell area, which is in the 1588 level. 877-927-6648. Chipotle Mexican Grill joining the group here, up about $4 right now. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Seagate Technologies out with revenue earnings. Their earnings $3.5 billion in Q3 versus $4.5 billion the year earlier, off by nearly $1 billion. How about net income? Net income up $416 million versus $1.15 billion. Yet they are getting rewarded out here, really rewarded here. If we take a look at this, it's up over its most recent swing point high. From a volume standpoint, this thing broke down here back on January 29, 16 million shares to the downside. If we take a look at the volume bar that it's up and over, it's 15 million shares from January 22nd So far today in trading in hour and 25 minutes or so, 6.5 million shares. So it's going to take out that swing point with volume, setting up a small little A to B equals CD out here, maybe not so small as we pull this back on the weekly chart. Now, as we take a look at Seagate, what it did do, which was nice out here, is if you take a look at this high-volume bar, this high-volume bar was June the 29th out here. June 29th, 2012, was 89 million shares to the upside. Goes ahead and moves from that price level right around $25, we'll call it, all the way up to a high in August of 2012, August 17th. Gets up to 35.71. Then what does it do? It pulls all the way back to that high volume bar, that breakout session. That is what you want to be looking for on any stock chart that you are trading. So again, if you're, no matter whether you can draw A, B equals CD, whatever the tools are that you might use out there, your eyes will easily be able to spot any kind of high volume bars, those breakout sessions. It's where you can go ahead and draw the line in the sand. Now what this has done is as far as the retracement is concerned, from our A to B point, it had made a 0.618 retracement. 29.87 would have been the number. It actually got down to a low of 30.26. Now it's making a 1-to-1 A to B equals CD. That's going to be $43.33. That's on Seagate Technologies. The ticker symbol out there is STX. If we take a look at the weekly chart, it's been a rocket ship. That rocket ship coming off of the 2009 lows. What it's doing today, it's past the 1-to-1.618 level. It's also past the 1.272 expansion. That expansion, so it's in that butterfly range here, but it's trying to get up and over it. That butterfly range taking you all the way, large butterfly, taking you all the way from October 17, 2003. We'll go ahead and draw that in here from that high, which was $31.35 all the way to the lows, all the way back in 2009. So a heck of a big weekly butterfly here, as you can see, that it has created out there, but it's trying to take that off. Why is that important? Take that out, I should say. If it takes that out, it'll move up to the 1.618, which is around $49, $48.97 out there. If we take a look at the markets and what they are doing here as we speak right now, we'll take a look at the ES Mini, and the ES Mini here has formed this 0.618 Gartley sell pattern. That's coming off of the highs of yesterday to the lows coming into the close, to, the high that was made here coming into that 9 o'clock hour, I suppose, after Mario Draghi's announcements, right in that 1580 level. And that 1580, what you're really waiting for up here over the course of the next several hours is some type of bearish candle signal. Maybe it comes around 1591, but between 1588 and 1591 on the 30-minute chart, you can also see you're approaching, you're not there, but you're approaching that overbought condition. You see the bearish candle, you see it being an overbought condition here. All you're seeing is a normal move. Just nothing more than a normal move here after a fairly large down day yesterday. I would say we got another signal in the markets with regard to the sell in May 6-month seasonal cycle. Folks, if you're off to start your day, have a terrific Thursday. Remember, Basil Chapman is up next. Following Basil, we've got Larry Pesavento, then Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. I'll look forward to seeing you tomorrow morning at 9 a.m. Take care, folks.